Hello everyone, welcome back to the channel. I've got something completely new. We're going deep today and we're going to be comparing the Forex market and the futures market. Now by the end of this very short video, about 10 minutes, I can assure you, you're going to be wondering, what on earth have I been doing even looking at the Forex market, especially without knowing the stuff that I'm about to show you in this video. Now you've probably been gambling. I'm sure you'll come to the same conclusion at the end of it, but look, stick around, decide for yourself. Now, as many of you know, I've worked at one of the largest investment banks in the world on the sterling desk, so I probably know a thing or two about the Forex market, right? And when it comes to the futures market, I've also worked at the highest level in the proprietary trading industry, trading things like the S&P 500 and crude oil. So I'm perfectly placed to compare the Forex market and the futures market. Look, we're about to get started, but before we get straight into it, I need you to pause this video, smash the like button so we can get this information out there, subscribe to the channel if you want to see more videos like this, and finally, most importantly, follow me on Instagram at NVForex, the fastest growing institutional channel on social media. Why is that? Well, as most of you know, again, I'm the only 100% independently audited professional trader on any of these channels. So go follow me there and let's get started. So look, first we're going to talk about the Forex market. I'm going to show you that none of the major players are using any of the stuff you're looking at, like technical analysis or random support resistance. They're not playing dot to dot, okay, joining up trend lines and all of that rubbish. But we'll get into that. So definitely stick around, because look, if you're using that stuff and they're not, it's a big problem, right? So top of the pile, you've got investment banks. Where I worked, why are investment banks at the top? Well, investment banks don't actually speculate in Forex as much as you might think. Their primary function is to provide liquidity to the market, something I never hear talked about on any of these channels. So look, think of it this way. If you wanted to buy something that we all buy, things like bread, eggs, milk, clothes, imagine you went outside and there were no shops. The economy wouldn't function very well, right? In the same way, without investment banks, it would be very difficult for any of the players on the list I've put together to access the Forex market, because investment banks act like these shops outside, okay? They provide inventory or stock. So they're going to be doing a lot of risk managing, and that doesn't involve any technical analysis. I should know, as I said at the start, I worked there. I never saw technical analysis being used. So what am I talking about when I say risk management? When I say risk management, I'm actually talking about inventory management. If they're providing the market with liquidity, think about it. They may have too much of one currency in the books because institutions like the ones on the list have sold it to them. Even if the bank didn't really want it, they just took it because they act like a shop. And just like any other business in the real world, they now have some surplus stock, right, which they don't need or want, but they just need to get rid of it, okay? It doesn't matter where some random line is on a chart. Quite often they just need to get rid of it, so they get rid of it regardless of where the price is on the chart. Think of Amazon. If they've got too much stock in their warehouse, they're going to change the price to get rid of it. They're not looking at the technical analysis of where, I don't know, washing machines or TV prices are, right? If that's what they're overstocked in. Look, this is the real world, not some game. Now, because investment banks are the biggest players, you need to know what they're doing to really understand the Forex market, right? Well, look, despite what people may have told you, you can't and you never will. And that's because they trade OTC or over the counter. Really important for you to understand. It basically means these banks and institutions are trading directly with each other, often on secretive messaging services. So you're basically blind to it, and they're certainly not going to be telling anyone what they're doing. And look, you're definitely not going to be able to see it on your retail chart, right? And that's a massive problem. Now, you can overcome this problem by using the futures market, but we'll get into that, so stick around. So next on the list, You've got central banks, typically, again, not speculating, but defending their domestic currency. Then you've got governments who'll be active for typically non-speculative reasons, right? You see it all around you. Infrastructure projects, building roads, hospitals, schools. To build these things, governments need things from abroad, right? Such as large machinery, and to buy that, it requires huge Forex transactions. But look, those decisions can be quite random in its timing, as things need to be signed off by various government departments. We all know how inefficient those departments can be. So again, no technical analysis involved, right? I mean, can you imagine the Prime Minister or the President of the United States making a decision on building a school or building a hospital based on where the moving average or the Fibonacci is? It's laughable. It's complete nonsense, right? Finally, corporates, big multinational companies, very similar to the government in the sense that they might want to invest in projects. Again, timing of these transactions, very uncertain. The guy who signs these things off in the company might be sick for a couple of days. He comes back on a Thursday. He decides, you know what, I'll leave it for a day, sign off on a Friday. I saw this stuff all the time when I was working on a desk at the bank. You can see this stuff. It has nothing to do with anything on your chart. It's a big transaction, and it might be happening when you're in the market at London Open, for example. It blows your position out of the water. Your squiggly line or candlestick pattern or whatever it is you're looking at, it's not going to save you, okay? That's why Forex is a very volatile, dangerous market. People are often transacting for reasons that have nothing to do with what you see on your chart. So you can see why retail investors are the odd ones out. The only ones using hocus pocus, such as technical analysis, and somehow thinking that indicators drive what all these massive players are doing. As I've just shown you, it's complete rubbish. It's simply not the case. You're never going to succeed using that stuff. The only people making money off the back of that stuff are the people selling you that garbage. So look, anyway, if you can't use random lines on your chart, what can you do to overcome these issues? Well, that's where the futures market comes in. The big advantage the futures market has is it's exchange traded. So remember before where I said banks and other institutions on the list, they're trading directly with each other. So you've got no idea what they're doing, right? Well, in the futures market, pretty much 99% of the time, you're going to have a middleman called an exchange between all the participants, and that exchange or middleman collects all this data and provides full access of everyone's transactions to everyone, including you, if you want it, no exceptions. It doesn't matter if you're a small trader or a huge firm, no disadvantages in the futures market, unlike in the Forex market. I can see what all these people on this list are doing, so I can make a proper investment decision. Go and check my previous videos where I've shown you trades of me using this data, right? Using things like footprint, volume profile, and so on. So look, finally, let's quickly look at some of the top players in the market. HFT algos, high frequency systematic trading, basically speculative in nature, using the raw data order flow, which I just mentioned, proprietary trading firms who set up to speculate mainly on the futures market. They're using their own capital, where I worked myself. And then finally, hedgers, typically producers who want to offset some risk. Again, I can see exactly what each of these guys are doing. And look, what do we have here? Retail traders, again, the odd ones out. The only guys using technical analysis, and the only guys, they're not even looking at the order flow. Now, look, the best markets to trade using futures are the S&P 500 and to some extent crude oil, tons of visible volume. Look, you can trade Forex if you want using the futures market. You've seen me do it before, but it's a very small futures market, very advanced, and anyone who does the G7 program, I make sure they get consistent on institutional markets like the stock index, things like the S&P 500 before going anywhere near Forex. Okay, so we're almost done. Final thing is execution. How can you make this work for you? Because look, I know many of you are thinking, hang on, I can't trade the futures market. The contract sizes are too big. I'm comfortable on my retail trading platform. Look, not a problem, okay? The beauty of the futures market is you can extract all of that visible information, the order flow, i.e. what people are doing, using a very cheap institutional platform. Do your analysis on it and then continue to execute on your retail chart. When the futures market goes up, prices on your retail chart go up. So even I prefer you continue executing on your retail platform, but just do your analysis on the futures market and then flip back to your retail platform. You know, why are you allowing all this almost free information which you can have access to just pass you by? It's criminal that you're doing that. It's certainly not helping your trading, right? You may as well be trading with a blindfold on, and it's quite sad for me to see in almost all the videos I see here about trading. Now look, I hope that ton of free information was useful. You can head over to my website, g7fx.com, if you want to find out more, or you can sign up to my completely free training series. The link is in the description below. Don't forget to subscribe to the channel for more videos like this, and follow me on Instagram. See you soon.